Welcome to a new week. It's 10 a.m. in Lagos, Nigeria. That's the time for Business Morning on Channels Television. And it's going to be a full package of current issues on the business scene. I'm Ini John McCoy. Well, let's start with global oil prices. Prices rose by more than $1 for a barrel today after the top exporter, Saudi Arabia, raised prices for its crude sold to Asia and the United States. And as indirect U.S.-Iran talks on reviving a nuclear deal appear to hit an impasse. Brent crude futures for February gained $1.69 to settle at $71.57 a barrel, while U.S. West Texas Intermediate crude for January were at $67.92 a barrel, and that's added $1.66. Yesterday, Saudi Arabia raised January official selling prices for all crude grades sold to Asia and the U.S. by up to 80 cents from the previous month. The price hikes were implemented despite a decision last week by OPEC Plus to continue increasing supplies by 400,000 barrels per day in January. Prices were also buoyed by diminishing prospects of a rise in Iranian oil exports after indirect U.S.-Iranian talks on saving the 2015 Iran nuclear deal broke off last week. European officials voiced dismay on Friday at sweeping demands by Iran's new hardline government. The talks are expected to resume by the middle of this week. And financial experts have asked for a carbon cryptocurrency and an integrated capital market, saying it could boost trade in Africa and sustain growth after the COVID-19 crisis. The experts who made the call at the just concluded economic conference in Cape Verde say financial systems governing respective countries on the continent have to be harmonized to achieve the reforms. According to the Chief Executive Officer of West Africa Rating Agency, a common cryptocurrency would ease the cost of doing business and give the continent an identity. It further adds that the proposed cryptocurrency would serve as a means of monetizing some of the continent's natural resources, such as gold and other commodities. Well, back home now, Pan-African mobile telecommunications giant MTN Group is selling 14% of their 79% interest in MTN Nigeria, expanding their shareholder base to include as many Nigerian retail investors as possible. At the launch of the nationwide roadshow, which was in Abuja last week, the CEO described the move as strategic to build shared value across operations. The offer for sale for this first set in a series offers 2.8% of 14% shares from the 1st till the 14th of this month, 575 million shares at 169 naira per share. Let's see how it happened.
Top executives of MTN Nigeria, staff members and partners of the company gather in this hall to witness the announcement of a public offer to retail investors of up to 575 million shares, priced at 169 naira per share.
It's something I did in January with the approval of the company secretariat, the chairman.
Commenting on the price announcement, the Chief Executive Officer of MTN Nigeria, Mr. Karl Toriola, says the offer is an opportunity for Nigerians to own shares in MTN Nigeria.
Our intention, and we hope the press will help us to communicate this as widely as possible, is to build a local shareholder base of more than 2 million Nigerians, while we remain focused on building the largest retail shareholder base in the country.
The offer, which opens on December the 1st and closes on December the 14th, is the first in the country to be delivered via a digital platform, and it comes with an incentive, as explained by the Chief Financial Officer of the company.
A good thing about this offer is that it includes an incentive of 1 free share for every 20 shares you buy, purchase, up to a maximum of 250 shares per investor.
The public offer of the shares to retail investors by MTN Nigeria Communications PLC is considered of great impact to the country's economy.
If we look across Africa and look across MTN's footprints in capital markets across several African countries, where they have done issuances like this, we have seen a transformational impact on those markets.
MTN's history, governance and performance really makes this, a transaction that is easy to sell. I said something much earlier that if you've never ever bought a share in Nigeria and you were only going to buy one share, this is probably the one.
With 68 million subscribers connected to the MTN Group in the last 20 years, this public offer of shares to retail investors is the first in a series of transactions as the MTN Group implements its plan to ensure broad-based ownership by reducing its shareholdings in MTN Nigeria to 65% over time.
Also, other happenings now. Last week, Moody's Investors Service changed the outlook on the Nigerian government of Nigeria to stable from negative and affirmed its long-term issuer and senior unsecured ratings at B2. What factors did Moody's consider, and what does this mean for the country? Well, we have Omotola Abimbola, investment analyst with Chapel Hill Denham, joining us to discuss this. Good morning, Omotola. I trust you had a restful weekend. So help us to understand how and why, at a time when it seems the economy is receiving blows from inflation, not just in Nigeria, but, the world over, and a drop in oil prices, drop in production of oil, and yet Nigeria is having a change in its rating to stable. Tell us, from your perspective, what led to this and what this means for the Nigerian economy. Omotola, I think you're muted. If you unmute yourself. Okay, I think we'll just give Omotola a little bit of time to... Okay. Omotola, can you hear me?
Yes, I can hear you. Can you hear me?
Yes, I can hear you now. So help us to understand how and what it means for Nigeria. At a time when it seems we have a blow of inflation, we have oil prices dwindling because of Omicron, among others, and then there's the drop in production of oil prices in Nigeria, and yet we are receiving a stable outlook from Moody's. What does it mean, and how did we get this stable rating?
Okay, thank you very much for the question. Well, there's this very old adage, that's very common in finance. Credit rating agencies, they are typically lagging of market movements, and this presents, outlook change by Moody's, demonstrates that in a very, very clear and concise way. Because what they are doing currently is probably what should have been done initially. Because over the past 1 year, since the last time that Moody's had, a ratings action on Nigeria, we have seen an improvement in the macroeconomy, particularly, looking at oil prices, which is a very major anchor of Nigeria's economy. Since we had, the COVID pandemic, come into place in early 2020, we have seen oil prices rebound very strongly, and now even to a very large extent, trading very close to or above the pre-pandemic level. And that improvement in oil prices has had a positive knock-on impact on other aspects of the economy, particularly the external account, that's the current account balance, which is now expected, to improve from a deficit of over 30% of GDP to less than 1% of GDP going forward. Also on the fiscal balance as well, in terms of improved revenue generation, by the federal government and other, states and local governments as well, and also on the economic growth, going forward. One other key thing that Moody's mentioned, in their ratings notes is that, the impending opening of the Dangote refinery, perhaps, in the middle of next year, would also have a positive impact on the Nigerian economy over the medium term, from the perspective of, improvement in export revenue, job creation, much more improved, current account balance, etc. So they expect all these factors to lead to an improvement in Nigeria's growth profile over the medium term. They're actually forecasting a growth rate of 3.5%, over the next 5 years, and that's perhaps higher than what we had before the COVID-19 pandemic of 2%, although still much more lower than what we had before the 2015, 2014 oil price shock. So, I mean, all in all, it does appear as if, the near-term outlook for the economy is positive, based on an improvement, in oil production. And that's the major reason why Moody's elected to change its outlook for Nigeria to stable from negative. And thinking as to how this would impact, on the economy going forward. But like I said initially, rating agencies typically, lag the actual market movement. I strongly believe that if you look at the performance of, Nigeria's sovereign euro bonds and even the corporate euro bonds, over the past 1 year, for instance, has already communicated, that particular change, the outlook for the economy. So in terms of the actual impact, in the short term, in the financial markets, it might be muted, but over the long term, if we see further improvement in the economy and much more stronger commitment to structural reforms, that would encourage Moody's to actually raise its credit rating from the current level of B2, perhaps to B1. And that's where we are going to see, a much more, bigger impact on the economy in terms of lower borrowing costs for the government, particularly in the international market, as well as for the corporates as well, because Nigerian corporates, more or less, their credit rating is constrained by the sovereign ceiling. So if the sovereign does not get the rating upgrade, many Nigerian corporates as well will not get the rating upgrade. So, but I do believe that we will need to see further reform by the Nigerian government that will encourage Moody's to actually raise its credit rating from the current level.
Yeah, because I was going to ask if this is worth celebrating or if it is more like a base year effect. Because, I mean, these days, when 2020 is your base year, you don't really have a lot to celebrate. It just seems like you have a lot to celebrate. So from your perspective, should Nigerians be celebrating this change of the outlook, or is it just a base year effect?
I think it's too early yet, and like you said, it's also a function of base effect. And when you look at Nigeria's credit profile in terms of its rating, there's really not so much to celebrate for now. We are rated B2, which is several notches below investment grade, rating threshold of triple B minus, and we are only a single notch above a triple C credit rating. So in terms of the numbers itself, it does not reflect the capacity and the potential of this economy. So rather than celebrating for now, I think what we should probably be doing now is to encourage our policymakers to make very very urgent structural reforms, particularly on diversifying the revenue base of the country into more non-revenue potential, as well as trying to reduce the ratio of debt service cost to revenue ratio, and also make much more structural reforms that will lift the economic growth of this country, back to around 5 to 6% that we had before the oil price shock in 2014. So those are the actual steps that we need to make for us to have a much more positive credit rating that will lead to an improvement in the borrowing cost of the government as well as Nigerian corporates.
So you mentioned some of the changes, positive changes that has come on board, in the last 1 year that has brought about revenue generation is improved, Dangote refinery. And then one of them has also been the PIA, the Petroleum Industry Act. Has it made any contribution to this change in Nigeria's outlook?
Absolutely, it has. From the perspective of structural reforms, as well as demonstrating the government's commitment to raising oil production. One thing you would know is that if you follow Nigeria very closely, is that the oil and gas sector, to a very large extent, it has been weighed down heavily by uncertainty regarding the Petroleum Industry Act, which has led to very, very poor level of investment. And we are seeing the results of that today. Currently, Nigeria's oil production, it has averaged roughly, 1.7 million barrels per day this year, if you include condensate. That is much more lower than our potential, of at least 2.2 million barrels per day. And also, if you look at the trend of oil production in Nigeria for the past 30 years, we have essentially stagnated because we have not managed, to go above the peak of 2.4 million barrels per day that we achieved, sometime, about 10, 16 years ago. So oil production has been a challenge, because we've not managed to clear the uncertainty, regarding oil and gas investment. But with the Petroleum Industry Act, that will reduce the level of uncertainty in the oil and gas sector and will foster more investment that will raise production level. It has also included, much more better fiscal terms for high OCs and other, indigenous and independent oil and gas companies looking to explore in the country. The host community, segments of the heart, which will ensure, effective contribution of oil and gas companies to the development of their host community. We also ensure, much more harmonious relationships between the oil producing companies and the community. So the PIK, it has set what I would call, like a very, very important standard or state that will foster improved investment in the oil and gas sector. And when the oil and gas sector is doing very well in terms of production, no doubt there'll be a positive knock-on impact on the economy as well. And beyond just speaking about the oil and gas production as well, one of the key things that the PIA also addresses is the issue regarding petroleum subsidy. Year to date, the Federation has spent more than ₦1 trillion on funding petrol subsidy, which is, close to 0.3, 0.4% of GDP. Last year, the government spent less than ₦2 trillion on capital expenditure. So we are spending roughly, half of what we spend on capital expenditure just on one component of, of expenses, which is subsidy. So the PIA has already set a framework, for us to have, a gradual removal of fuel subsidy. And we have seen authorities over the past couple of weeks, come out to make a commitment that by next year, when they begin the full implementation of the PIA, perhaps we're going to have petrol subsidy being phased out gradually. So no doubt the passage of the PIA and many of the accompanying, regulation that has come to bear with the PIA contributed, to Moody's decision to change the outlook of the country from negative to stable. But for us to have, also to move above this, also need to see, very strong level of implementation by the government over the short to medium term.
Okay, well, when you talk about subsidy, that seems like an unsettled matter at this time because we have a lot of dissenting voices. But Moody's also expects Nigeria's fiscal deficit to narrow very slowly with ongoing efforts to increase non-oil government revenue. Would you say that the government is as intentional as they should be in boosting, revenue from the non-oil sector?
I think we've seen some baby steps already in terms of diversifying revenue away from oil, and we are seeing the positive results of that already. Don't forget, in 2015, we saw the federal government actually fully implement the TSA policy, the Treasury Single Account Policy, and that singular action alone, it has led to an explosion or a massive improvement in the independence revenue of the federal government. That is the operating surpluses of the ministries, departments, and agencies of the government. So that improvement in independence revenue, it has helped to grow the non revenue of the government. Beyond that policy as well, we have seen an initiative which is called the Finance Bill that is being forwarded to the National Assembly every year to follow the national budget. And with the introduction of the Finance Act, we have seen, a constant fine-tuning of our tax laws, to reduce the loopholes, to improve transparency, to bring about more clarity, and to lead to an improvement in revenue generation. And we have seen the positive impacts of that as well. Don't forget, we had, the VAT rate that was increased, about 2 years ago from 5% to 7.5% through the finance bill. And today, we have the VAT revenue of the government growing by more than 20% annually. Same thing if you look at the customs revenue, if you look at, company income taxes as well, they are all growing at double digits annually. And if you look at the share or the contribution of non-revenue, today we now have non-revenue contributing more to federal government's revenue than foreign revenue. So that's the transformation. But I don't think we should stop there because we actually have a long ways to go.
Yeah.
If you look at other fiscal metrics, they are very, very poor. Although our debt to GDP ratio looks very low at 35% compared to our peers, by the time we look at our level of debt compared to revenue, it's quite significant at more than 400%.
All right,
also the debt
Omotola.
service.
All right, Omotola, thank you so much. Obviously, when we talk about boosting revenue from the non-oil sector, it's a long conversation that we'll continue to have in Nigeria until we see the full fruits of it. Thank you so much for being a part of the show this morning, and enjoy the rest of your day.
Okay, thank you.
So we'll take a break now. After the break, we'll be looking at Nigeria's financial landscape through the eyes of Financial Institutions Training Center, FITC. You stay with us. It's Business Morning on Channels Television. You're welcome back. You're still watching Business Morning on Channels Television. Well, conversations at the just concluded African Economic Summit centered on resilience of Africa's financial system. Of course, Nigeria is included when you talk about the continent. Well, this is closely related to the theme of the 40th anniversary of Financial Institutions Training Center, FITC, and their theme is also on towards a shared prosperity in Africa. Well, we have the Managing Director, Chief Executive Officer, Ms. Chizo Malize, joining us now to tell us why they chose to discuss this at this time, and of course some other issues on the financial system in Nigeria. Good to speak with you, Ms. Chizo. So it's a beautiful red Monday.
It's a red day.
I guess it's the spirit.
Correct.
So you just celebrated, or you're still in the mood of celebration of your 40th anniversary. Can you speak to us on the heritage and the impact of FITC in the financial service sector? And, this is 40. Next year we're doing 41, so and beyond.
Right. Thank you very much for having me. And thank you, Channels Television, for the great work that you do around this nation and beyond. FITC is, interestingly, set up to support the financial service sector, and that's through learning, knowledge solution, providing also advisory services to the industry. And it is recognized how important the financial service sector is to the Nigerian economy, and of course every economy. And so FITC is set up by mandate, by visionary founders, and set up by Government Act. We're under the supervision of CBN, NDIC, and of course the member banks, which are the Nigerian deposit money banks. The interesting thing is that it's an organization that over 40 years has consistently transformed itself, bringing learning and knowledge solutions to the industry, helping to equip and capacitate the industry workers and players so that they can be their best at all times and be able to foster growth in that industry as well as in the economy as well. And so 40 years of transformational leadership, 40 years of excellent programs, 40 years of impact.
4 decades.
4 decades. 4 great decades of impact.
So the anniversary has the theme towards a shared prosperity in Africa, the role of the financial system. Why is this conversation important at this time? Because even at the just concluded economic conference, African Economic Summit, we also had, the theme close to financial system and all that, with Omicron in the air and other variants of COVID-19. Why is this an important conversation at this time?
It is a very important conversation to have because the African economy offers significant opportunity for each of the individual countries, of course, and the continent as a whole. Several continents have taken opportunity of scale to either create opportunities, create markets, expand trades and all of that. So it becomes necessary that Africa must begin to look that way. So anywhere in the world that you travel, Africa is the most difficult place to travel around. I've lived and worked in 8 African countries. It's easier to go to Europe and back to Africa than to travel to some of the African countries. But there is a whole lot of opportunity for a continent of over 50 countries. And the opportunities come from collaboration around businesses, around technology, around innovation, because we are also able to not only scale that, but transfer and catalyze growth across the entire continent. And you know what it's like, Formidable One, for instance. That's what we could become. And there are loads and lots of opportunities in Africa. Think about a very youthful population in Africa. Think about the ingenious young people. Think about what they are doing with technology and innovation. And think about how all of that can stimulate and catalyze growth in the economies of the entire countries within the region. There is no way that we would never be better if we do not. We would be better the moment we begin to have a common vision with regards to growth, trade, innovation, technology, and transfer of opportunity.
Yeah, it's very interesting, you know, that you said that, because that's always been on my mind. That kind of bothers me, you know, talking about your experience traveling around the continents to move from one country to the other, currency convertibility. These things become hindrance. Do we see ourselves as competition instead of complementing, you know, our efforts and resources, and then, you know, coming as one market, one regional market, to make the most of our potential?
Well, I wouldn't say competition. I think it's much more of people looking inwards, and then vision is what drives such collaboration. So the moment that each of the countries are able to get ahead and realize that we need each other, we can hold each other's hands to rise, then these collaborations will begin to happen, and it will foster trade. So from visionary leadership onto the people, onto creating opportunities for organizations, for companies, for businesses, for individuals to be able to cross-trade across borders.
And when we talk about crossing borders and going against or overcoming these hindrances, how can this be harnessed? How can we harness the continent's wealth using the financial services sector?
So the financial system is a very, very solid one. And I'm very delighted and excited about Nigeria that is basically leading in the financial system across Africa. We've got a minimum of 8 Nigerian banks with transactions and offices and representations across African countries. Some over 20 branches in 24 countries, some over 8, some over 10, and many more. As a matter of fact, I worked in some of the Nigerian financial service brands when I did the 8 African countries that I worked in, representing each of these banking brands. So you find that the maturity of the financial service system, the structure, the processes, and the diligence from policy, regulation, and all of that, bringing all of this into the system equips it and makes it to be solid. But the other part also is the fact that the financial service sector is also creating products and programs that are transferable, that can also elevate and create wealth. Whether you take a look at the financial inclusion opportunities with telecoms and telecommunication products that have also helped to scale financial services. So whether you're talking about M-Pesa in Kenya, whether you're talking about all of our 9Mobile and all of the companies around here who've developed fantastic mobile banking solutions that helps to reach the lower range of the market. All of this is bringing expansion and opportunity across the continent. And our own brands in Nigeria, financial service brands, have started to help SMEs to be able to do much more. So whatever, no matter how small your business is, you are able to transact and receive your payments and make payments to other third parties, even as SMEs. So these are a lot of the things that the financial service system is bringing in to be able to develop and catalyze growth in Nigeria and across board, the entire continent.
And FITC is the collaborating factor?
We are dotting all of the I's. We are the connecting rods, and we're very excited about that. In our very recent summit, which you mentioned and spoke about, in commemoration of our 40th anniversary, we were able to bring, as a foremost forward-thinking learning institution, we were able to bring fantastic people to the platforms to be able to share thoughts and ideas. The keynote speaker at that summit was the Central Bank, Deputy Governor of the Central Bank of South Africa, and we've got other speakers from Nigeria, from the telecoms, from banking, and insurance. Because even insurance got products that can scale the entire economy. And so besides these high-powered thought leaders who were, industry experts and thought leaders in their own right, we had a minimum of close to 2,000 people who keyed onto this program from the whole of Africa, representing a minimum of 38 countries of Africa. And everybody heard this. Everybody took learning. A good number of them central bank workers from all the countries in Africa, financial service experts, people who work in the financial service sector, and people who see and are seeking opportunity for such growth and prosperity we're talking about. So those are the kind of things that FITC does with thought leadership. We bring the best of resources across the continent, and we also create content and create solutions, knowledge solutions, thought leadership, and put people on the platforms so that they can share learnings with individuals, creating more stimulations around the economy.
And, when we talk about Africa, one platform that excites me is the AFCFTA, but I don't know, where are we? I mean, you guys are in the financial system, and it's one thing, that could bring the markets together.
I do know that it's being embraced. For everything that is new, there is the traction, there is the phase, and I'm sure that you can see that a number of countries are beginning to record success with that. You can tell that even our neighbors, Ghana, whether we like it or not, we're going to start doing much more with Ghana, even though we had been doing in the past. And before you know that, it will transcend and then trickle down across board. I know very well that a lot of countries are excited about it, but for everything that is new, there is a phase, and we would get to that point where the country will be totally united with that.
So we cannot have conversations and not mention COVID, especially not with the new variant Omicron. So let's talk about the impact of the pandemic on the economy and how FITC has provided innovative solutions. The world is going virtual. A lot of things that we never thought. I mean, we hold meetings now. We have events virtually now. What impact or what difference has COVID brought, and how has it been embraced in the financial sector?
It's a very lovely thing to talk about for us at FITC. Prior to COVID pandemic, which came in the first quarter of 2020, that was last year.
Yes.
We had part of our strategic vision was to move learning to become predominantly digital. Because as part of our digital transformation program, we recognize that technology and innovation is driving the way that we all live. And that also includes within the learning space. So for us, we recreated our programs so that we can be more technology driven. And so by the time that COVID hit, we were very ready and able to roll out all of our programs, migrating from 98% physical to 99% digital and online. So one of the things that we did was helping the industry keep alive by providing content, relevant knowledge to keep them abreast and ahead while the world was wondering what to do with COVID. And the industry is so excited about the way that FITC took the lead in doing that, driving knowledge digitally so that wherever people are, they could learn more, they could be more, they could become much more efficient in the ways that they operate. So COVID was a remarkable period for us positively, and our industry is excited about that impact.
And what do you see when you look at the financial landscape in Nigeria? What do you see, say, in the next 5 years? Are we doing well? Are we on the right track? Are there some factors that should be imputed, to help the system grow faster, than the rates that we're doing at the moment?
I do think that we are gradually doing well. The good thing is that we've got policy makers, we've got the Central Bank of Nigeria, we've got the Ministry of Finance, we've got all of these policy makers that come together to check the trends and indices, and with fantastic insight, help to put us on the right track. For every area and every business, there is always a traction. So you will notice that whichever the indices of the economy that you take a look at, there is growth relative to what is happening everywhere in the world, coming and pulling out from COVID. So we are not in a bad place. We would not say that we are all optimistic because we are putting structures and systems in place. And then the greatest thing also is that there is measurement, there is tracking, there is monitoring, and there is also reporting. So there's transparency in the way and direction with which the economy is being looked after.
Yeah, well, certainly.
And I would also talk about the role that we play at FITC in ensuring that even the industry, the financial service system, is supported to do all of this. And that's very important because we are delighted about this significant input in making sure that these things get advanced. So whether you take a look at our learning, we're helping organizations find new learning solutions, drive capacity, build capacity for their people so that they can be the best they can and as much as do so much for the industry. Through our advisory services, we're also providing companies advisory solutions and giving them direction in the way they ought to go and the opportunities they can take. And that also includes our policy advocacy work with CBN, NDIC, and all of those. So all work together to get the results that we would love to see.
All right, Ms. Chizo Malize, I will say congratulations on your 40th once again, and we look forward to greater impacts from FITC.
Thank you very much. Thank you for having me.
Good to have you.
Thank you, yes.
All right, so moving on now, let's see how FX market last week did. So in the FX sports and derivatives market, the total turnover for the week ended December the 3rd, 2021 was $893.36 million, representing a decrease of 18.39% from 1,094.65 million reported for the week ended November 26th. The week-on-week decrease in total turnover was driven by over 55% decrease in FX derivative turnover, despite the 4.6% increase in FX sports turnover. The week-on-week decrease in FX derivative turnover was driven by 47.83% and 81.40% decrease in FX forward and FX futures turnover. Well, going to the FX spot market now, total volume of transactions for the weekend of December the 3rd, 2021 was $706 million, representing an increase of 4.63. We have Tolu Lokpe Shebanjo now joining us to share his thoughts on how the week fared last week. Tolu Lokpe, good morning.
Hi, good morning.
Good morning, yeah. So we see decrease 18.39% in the total turnover for the week ended last week. How do we explain this? What factors drove this?
So basically, liquidity is one of the major factors that contributed to the weak turnover in the fixed income market. Aside that, we saw the CBN float an auction where a total of 40 billion was on offer across the standard tenors. However, just 37 billion was sold, while the stop rate was maintained at 7%, 8.5%, and 10.1% on the long, short, medium, and long end of the maturities offered at that auction. So those are some of the factors that contributed to the weak sentiment, particularly in the fixed income market.
Total volume for the week, we saw an increase of 4.63% from the volume of transactions executed in the week prior to that. So there was an increase, and yet, how do we relate this to?
Okay, so basically there was an NTB auction conducted the previous week, so that amounted for the volume of transaction consummated in the fixed income market. However, for last week there was no NTB auction, so we've seen gradual decline as most of the demand were already met at that auction the previous week. So we saw a decline in market activity due to the lack of demand, particularly as the rates in the fixed income market are quite low. So markets are skeptical about picking up these instruments at this low yield.
So what's your expectation for this week?
Oh, for this week, we expect 2 auctions. One, the home auction. There's a 50 billion maturity coming in on Tuesday. So we expect the CBN to float an home auction on Thursday to manage the market liquidity. We also expect an NTB auction this week. A total of 53 billion should be rolled over at the auction, which will be conducted on Wednesday by the DMO.
All right. Tolulope, thank you so much for sharing your thoughts with us. We'll certainly look out for the week and see how the week goes. Enjoy the rest of your day. So we'll take a break now. When we come back, I will do an opening call to London. Do stay with us. Welcome back. You're still watching Business Morning on Channels Television. Let's head to our London studio now with Juliana Olainka. Hi, Juliana. Good morning. So the UK has reported about 300 cases of Omicron. That's a new variant of COVID-19. And as expected, there's been reactions. Economic forecasters have slashed expectation for Britain's recovery for next year. So I'm just wondering, there's the promise of the vaccine, and we know that the UK is doing pretty well when it comes to vaccination. Doesn't that come into play in this forecast?
Well, yes and no. I think we're all learning about the Omicron variant. Nobody knows at this point how severe it's going to be, which is one of the reasons why the Confederation of British Industry, which is Britain's biggest business lobby group, has slashed their forecasts. I believe in the summer they predicted that GDP would rise by 8.9% this year. That's now been dropped to about 6.1% next year. They've also dropped their expectations from 6.1% to 5.5%. KPMG, they've painted an even gloomier outlook. They don't expect GDP to rise by more than 4.1% this year. But, you know, there are so many mixed messages, Innie. We're hearing that lots of people now are cancelling their plans for Christmas. Travel plans definitely have been completely disrupted. The all-important service industry, which contributes 80% to British GDP, is very, very concerned with some of the mixed messages that we're getting out of the government. Of those cases that you just mentioned that are occurring in England, unfortunately, most of those cases are people that are double vaccinated. Are they dying? No. Are they reporting serious health conditions? They're not as of yet. But yes, I'm not sure if the vaccine is going to be the solution to the spread of this variant.
But it seems like the red list is active again. Flights from Nigeria have been suspended because of this. Which other countries are involved?
Well, Nigeria was the only country added recently. Big story, of course. I'm sure it's big in Nigeria. It's definitely huge here. This has disrupted so many plans over the coming weeks. Lots of people stranded in different parts of the country. And just to be clear, so if you are not British, Irish, or a holder of a UK residency pass, you can no longer travel into Britain. And if you are one of those three, then you have to go into mandatory hotel quarantine, which costs thousands of pounds, up to £1 million naira a pop. This is because recently, I believe there were 21 cases of the Omicron variant that were linked to recent travel from Nigeria. Of course, there's been lots of reaction from this. The Nigerian diaspora here in the UK, and I'm sure, as you know, are very, very vocal. I know there's been a series of radio interviews taking place today on the BBC and on BBC News. Lots of people are calling this travel apartheid. There are no scientific backing, as it seems, as of yet. But we'll just have to wait to hear more from the Health Secretary, Sajid Javid. This did happen to India earlier this year, and unfortunately, India does have lots of geopolitical clout here in the UK, and they were on the red list for, I believe, between 8 and 10 weeks. So it's not looking great as of yet, but of course, we'll be keeping you updated from London as this story develops.
Yeah, sure. And what else are we expecting this week?
Busy week. I suppose the most important day is Friday, GDP figures for the month of October. In September, GDP rose by 0.6%. Lots of provisions are going on. We'll also be getting PMI data in the construction industry later today. The PMI data that we've been having recently, which has a forensic look at the private sector, not been great. We are seeing a little bit of an uptick, but what we were seeing earlier in the year, huge rises, have started to level off. So there are concerns that the all-important quarter isn't going to get back those gains that the Treasury are most hoping for. But we'll just have to wait and see. I believe some economists have put the GDP forecast to be anywhere between 0.4 and 0.9%, but that figure will be out on Friday.
All right, so we'll have more updates from the UK at 1:30 during Business Incorporated. Talk to you then.
Thanks, Ine.
Let's go to the crypto space now. Ladi tipped me off a bit earlier that it's been a red, not very exciting. I mean, we're getting close to Christmas, Ladi. I don't want people to lose their money in this market.
Yeah, it's like the Grinch. The Grinch is coming hard for the crypto market. You see what you're wearing there? It's more red than what you're wearing.
Oh my God!
You see the market cap at $2.25 trillion. It's lost that $3 trillion mark.
Wow.
Might go below $2 trillion the way it's looking. We see the 24-hour volume there, 24.54% down, with Bitcoin dominance inching down at 40.78%. We see price of Bitcoin this morning, $48,199. It did fall as low as 41,000. Over the weekend was quite a bloody weekend. I'm sure traders were not happy at all over the weekend. Let's bring in Olumide Additional now, financial market analyst. Hello, Olumide.
Hello, Ladi. Red Monday.
And red weekend, red Monday,
yeah.
Olumide. What is going on in this space?
The usual narrative, investors that have been a bit cautious will understand the fact that, the market is tightening. I'm talking about monetary policy around the world. The U.S. Fed has highlighted the fact that inflation was no longer transitionary, meaning that at some point they need to start reducing the cash flow in the system. And I think some investors had already started positioning some exits dramatically. And we saw record sell-offs on Saturday where about 400,000 crypto accounts got liquidated. Those that had exposure in the futures market because Bitcoin lost about 10,000 and Bitcoin got as low as 42,000 before recovering above 48,000 temporarily. Now we are seeing the fact that the bulls cannot support that support level 48,000 mark, suggesting the fact that more downside risk remain. And the dollar on Monday morning is looking fired up on all cylinders. All assets are down except crude oil that is showing some record gains. I think people also need to understand that the narrative is changing in the crypto market. We've seen that the crypto tax bill is already in law, is in place. So Americans are becoming more cautious to be exposed in that market. And you need to understand the exposure Americans bring to that market. So it seems that a lot of crypto investors are going to have an uneventful Christmas season because the market seems, like you said, it seems like it's going to break below the $2 trillion mark.
And looking at that tax bill now, you're supposed to actually declare, what you own in the crypto space. How's that going to work?
Exactly. Yeah.
How's it going to work? Because we have privacy coins,
yeah.
How do you know what people actually own?
Well, that's left for the IRS to find out. I think people have to file in and things like that because usually in America, people file in their assets and things like that. But the concern is how they'll be able to capture such space because, you see, the crypto market itself is in some form of not transparent because, there's no name attached to the account wallets and things like that. So people are concerned that the enforcement might be a bit vague and things like that. But I think moving on, the Americans will find a way. But I think the real concern is how crypto regulation will come in place because also the U.S. Treasury, I'm talking about Janet Yellen, she's also raising the alarm bell, the fact that crypto regulation will need to be enforced. And just some days ago, the U.S. SEC Commissioner, Gary Kensey, he spoke on the fact that crypto exchanges need to face stiffer regulation. So the market is reacting to such parabolics. And we've not forgotten the fact that Omicron has disrupted the market, despite the fact that we've not seen any deadly outcome from the new mutant variant.
All right, how long do you see the Bitcoin price holding this 40K range?
To be honest with you, I think the odds are not with the Bitcoin bulls because except we see a shift from the dollar strengthening, or we see the fact that we see depressing economic data, which seems to be unlikely, and except we hear a company like Apple or Amazon shifting more into crypto space, the downside seems to be stronger because the season we're going into, we see a lot of investors usually traditionally moving most of their risky assets to the safe haven currency, that's the US dollar. So I think it would be safe for us to see if Bitcoin can break, if Bitcoin can stay above 40, but downside still remains very strong.
And we've seen most altcoins down about 40, 30%, double digits, all around the market. Which altcoins have, stayed strong in your observation?
I think those that have strong exposure in the NFT ecosystem, because just like as you rightly said, when Bitcoin catches through, the crypto market comes, and we've seen that different blockchains that have NFT exposure seem to suffer decent gains. Ethereum is still close to the $4,000 mark, so I think Ethereum stands out. I think Polkadot also is something that I would not want to ignore, despite the fact that it suffered record losses. Tezos, Solana, Dana Smart Chain, these are blockchains that have NFT exposure. So I see them standing the test of time. But the problem about it is that they might not get to such level we saw in Q3.
Right. Olumide, well, it'll be interesting to see how the metaverse tokens and all the virtual lands play out in a serious bear market. All right, Olumide, thank you so much.
Thank you.
All right, so looking at the top odds on market cap, there we see BNB is down 5%. It's all red on that counter. Cardano down 6%, Solana down 7%, and we see XRP lost the $1 mark, 77 cents, down 8%. So, Ini, it's red.
Yeah, it's red.
red.
And I'm wondering, where is that prediction of $100,000?
100,000. Well, I know a couple
We're in December, man. Today is the 6th.
I don't know how that's going to happen.
Is it going to be on the 31st?
It'll take a Christmas miracle for that to happen, actually.
Wait for Santa Claus. Santa Claus is coming with a bag of gifts.
Right.
All right, Laddie, thank you so much. And that's it on the program today. Thank you so much for being a part of it. Let's do this again tomorrow at the same time, 10 a.m. I'm Ini John Mekwan. Do remember, 1:30, Business Incorporated will be back. We'll give you updates from the world of business.